I request everyone to please take your seats. Let's start the next session. I request Mr. Ibrahim to come on the stage. It will be worthwhile to know that Mr. Ahmed Ibrahim is known as UAE ECM Guru, that is IPO Guru in UAE. So please welcome him with a big round of applause. Mr. Ahmed Ibrahim is a managing partner of Ibrahim and Partners. He has been a go-to figure for domestic equity capital markets in UAE. He has been heading equity capital markets at Al Tamimi until 2018. He has been named Regional Managing Partner of the Year by IFLR in 2024, and his team was recognized as the Capital Markets Team of the Year by Chambers and Partners in 2024. I now request Mr. Ahmed Ibrahim to take the charge and enlighten us on the IPO journeys in UAE. Thank you.
Thank you. Good morning, everyone. Good morning. It's a pleasure to be with you today with this distinguished gathering, all gathered here today to discuss and explore different possible means of enhancing and advancing capital markets and, of course, corporate governance. We have a very distinguished investment bankers, law firms, business owners, and we also had regulators in the previous session. Over the past few years, we've witnessed a surge in equity capital markets in the UAE, and just let me give you a little bit of figures so you can put this into context. From 2010 until 2020, during 10 years, the UAE witnessed around 8 to 9 IPOs in 10 years. From 2021 until 2025, and still we haven't even reached Q1, the UAE witnessed around 26 to 27 IPOs, let alone the other direct listings that happen in the market. So in 4 years, the UAE actually witnessed probably like 3 times what the UAE witnessed in 10 years. So definitely there is a surge in the equity capital markets in the UAE, and this has been driven by either government-driven IPOs, like the very bold and supporting decision made by the Dubai government to launch 10 IPOs of the government-owned entities. We have the support of the government of Abu Dhabi by taking best of the jewels of ADNOC companies to public, in addition to other very successful family business in the UAE. What I'm going to do today is basically walk you through the key of success of any IPO, not only during the IPO journey, but until after the bell ringing, to have a smooth listing and post-listing share performance of the share. Let me just first, and I'll try to make this very short and interactive, because it's very dangerous to stay between the audience and lunch. So I'll try to make it quickly as much as I can. But just for everyone, just to visualize what is an IPO and what is the process of an IPO. So basically, it starts with an engagement with the regulator, appointment of advisors, whether legal advisors, financial advisors, and investment banks who will market for the IPO. You prepare the prospectus, you do the ITF, or the intention to float, to announce that you are going to launch your IPO. Then you start your roadshow, and lawyers and capital markets lawyers and investment banks usually use some code terms just maybe for us to feel that we are a little bit important and sophisticated, like roadshow. It's marketing campaign, okay? So we will try to decode all of this terminology. And then we open the subscription period for investors to buy into your IPO, and then ultimately the allocation, and to announce the price of the IPO, and then ultimately it ends up with the bell ringing and listing of the shares. So I'm going to highlight 10 key matters that any IPO candidate will have to bear in mind. And these maybe 10 matters have been gathered through the IPO that we were involved in. In the UAE only, I was lucky enough maybe to lead around 30 IPOs, 18 of which was just in the recent three years. So during all of this journey, I've tried to somehow collect the do's and don'ts that any IPO candidate should consider in the IPO journey. First and foremost is readiness. A lot of companies wait until the shareholders say, let's go public, and then they start working on their housekeeping. That will be too late. So the IPO map, generally, you will always have a specified IPO window. And if you miss your IPO window, you'll have to wait for the next IPO window. And if you are going to work on your housekeeping and putting together your IPO perimeter and working on your corporate governance, working on putting together a board structure that will be sellable in an IPO, probably it will be too late to launch your IPO during the IPO window. So it's very important that you start early. It's key. Keep your company always ready, because even if you are not going to ultimately go for an IPO, it's always useful, it's always healthy to keep your house clean. Even if you are not going to do an IPO, you can do a private placement. You will always be very appealing to any strategic investors to look into your company. So you will lose nothing by being prepared and have everything in order and keep your house clean, whether you go for an IPO or you decide to stay private. So readiness is key. The second thing is choose of advisors. Not the cheapest, but the best. And I've witnessed personally a lot of companies that they decided to appoint lawyers, banks, and financial advisors based on a procurement-driven process. And it has always ended up with disasters. Bear in mind that your company will do an IPO once in the whole life of the company. So please do it right. And it is very sensitive. And it's like, and I always say in the IPOs, it's like the young babies. With any shake, it can be ruined. So you just need one mistake by any of the advisors, and your IPO is at risk. So don't risk your IPO. If you are doing, God forbid, any very critical surgery, brain surgery, you're not going to go for a doctor who did this once or twice just to save a couple of bucks. You'll go to a surgeon who just did this surgery or this operation 10, 20, or even 30 times. So please don't let your procurement department lead the appointment of your lawyers or your financial advisors of banks. Please make sure your selection of advisors is based on merits rather than on price. The third, maybe key matter that people will have to bear in mind is the early engagement with the regulators. Here in the UAE, we have a fantastic regulator, very supportive, whether it's the Securities and Commodities Authority or Dubai Financial Market or Abu Dhabi Securities Exchange. They are very supportive. They will always provide you with advice. They will always accommodate your needs. But don't expect last-minute miracles. So you need to engage with the regulator early on. If you have any issues, you have to engage with them early on so you can have the lead time to fix this. If you have any financial legacy issues, you need to discuss this early on with your advisors who can take this directly with the regulator. You need to do this early on before even you can start filing any of the documents, before filing the prospectus, because all of this will shape your offering documents and your engagement with investors. So be prepared, make sure you have early engagement with the regulator. Please be upfront, make sure that you disclose any issues that you might have so you avoid any last minute surprises when it will be too late to fix whatever problem you are going to have. The fourth point, which is again not less important than the other, is the audit quality. Again, back to the second point about the selection of advisors. Audit firms is very important. And we have here, international investment bankers who, when I've seen this firsthand, they may have concerns about your company if the auditor is not one of the big four. If you are not going to get one of the big four, then you need to have very reliable and credible auditing firm. Because basically, your financial statement are the foundation of your IPO. Investors will look into your financials. And the auditor will basically guarantee the credibility of these financials. So you need a very solid, reputable, and credible auditing firm. You need an auditing firm that understands your activities, understands your sector. And to be very honest with you, it's not only about the brand name, but you can even go more deeper than that in terms of the selection of the partner within each auditing firm. So it's very important that you have a very credible, well-known auditing firm that basically do not raise the concerns of investment banks and institutional investors during or throughout the IPO process. The fifth point is basically the corporate governance, which is, I think, the theme of today's conference. And in my opinion, corporate governance starts with mental governance. So it requires a little bit of a mental shift between running your company as a private company to run it as a public company. It's not your company anymore. You will have to disclose all your financials to third party, to the market. All material events will have to be disclosed. So it's not your company anymore. And you need to work on that very early on. The first thing that you need to do is change your mindset. You have to think of your company that it's not yours anymore. You are going to share it with public, particularly when it comes to material events, financial performance. Other corporate governance consideration will always be putting together an independent set of board of directors. You need to have the majority non-executive. You need to have at least 1/3 independent board of directors. You cannot rely on the family and friends that you always had to do previously when the company is private. So you will never be able to do all of this if you are going to start just when your shareholders push the button. You need to basically work on your corporate governance ahead of the IPO. You need to work on your policies and procedures. You need to have insider trading policy. You need to have a policy for conflict of interest, how the board will be remunerated. And this will have all to be ready because banks will never allow you to go on the road without having these all corporate governance matters in place. The sixth point is basically, in my opinion, is one of the key points of success, which is basically pricing. And one of my friends told me before, as a joke, do you know what IPO stands for? So I told him, what do you mean? IPO, it's initial public offering. And he told me, not really. IPO stands for probably it is overpriced. So pricing is very important. It is important for a successful IPO, but more importantly, it is very important for the share performance after listing. So the problem was, deciding the right price is a little bit against one of the human instinct, which is basically the love of money. When one of the shareholders wants to sell, he wants to sell at a very high premium. But does this actually satisfy the share performance after listing? It's a very big question mark. And my advice on that, and we've seen, companies that were a little bit greedy, and we've seen other companies that they left something on the table to investors. The key examples for, people will always make money in ad hoc IPOs because they leave something for the people on the table. People make money, so it set the tone for the next IPO. If people lose money in one IPO, it just affects the sustainability of capital markets going forward. So listen to your banks. And listen to your banks, whether it's in relation to the price range or final offer price, or even in the offering size. Try to control your greed, because ultimately, if you follow the advice of your banks, if the share price rises 10% after listing, you will be the biggest winner, because ultimately you will continue owning around 80 or 75% of the company. So if the share price jump 10%, you are the biggest winner. And if, God forbid, you decide to collect as much as you can in day one, and you disregarded your bank's advice, and the share price drops by 10 or 5%, you will be the biggest loser, because you still hold 80% of the shares that will go down. So it requires a little bit of a long vision. It requires a little bit of controlling your human instinct not to collect as much as you can, and try to leave something on the table for investors to make money. The following point is basically in relation to equity story, telling a compelling story and a credible narrative. You need more than numbers. Definitely numbers are very important, but people will always want to know what you are going to do going forward. People will want to know what are your strategic strengths. People will want to know who are your competitors, how you are going to deal with your competitors going forward, what are your expansion plans. And generally speaking, and just to put it in a very broad terms, there are 3 types of equity stories that any companies will have to find one of them to follow. It's either growth equity story, so you promise investors that the company will grow, the share price will appreciate. And the second type of equity story will be the dividend yield. So you promise investors that you are going to distribute certain percentage every year, 6%, 7%, or 8%. Or the third option will be a combination between growth and dividend yield story. In this part of the world, and this is something for everyone to understand, and we'll be happy to hear our friend Bernard views on that, but in this part of the world, people are more keen, are more interested in the dividend yield equity story, and it's very important for any IPO candidate to understand the mindset of investors based that in the region that the IPO will be marketed through. And I've seen, the 3 equity stories, and I think from experience and practice, always the dividend yield equity story is more successful in this region, to an extent that we've seen recently a new trends in companies that they actually guarantee a minimum payout every year. It started probably with InvestCorp IPO, and I think they, if in my recollection, I think they promised around 7 or 8% annual dividend yield. So it's very important that you understand the mechanics, and again, listen to your banks when it comes to the dividend yields that you need to think and consider, and any sweetener that you need to offer or leave on the table for investors. The next point is very interesting as well. It's very practical, which is basically internal alignment. and internal alignment between shareholders. And as it might seem simple or easy, or even we can take it for guaranteed, but definitely this doesn't happen in practice unless the company is owned by one shareholder. And I wouldn't say one family, because even between the one family, there are disagreements. Some family member want to sell, other family member want to raise. One family member wants a certain valuation, the other one wants a different set of valuation. One wants to control the board, the other one is happy to abide by the corporate governance regime. And you don't want to start all of this disagreements at the time of the IPO or when you launch, before investors or before regulators. You need to have this alignment early on. And I've seen this happening in many companies. The classic example, if you have a JV of 2 or 3 shareholders, not family members, but actually 2, 3 shareholders not related to each other. It will always even be more complicated if one of these shareholders has joined the company at a little bit of a premium in terms of valuation, and the other have already started the company from scratch. So there will always be discrepancies in expectation when it comes to pricing. The new joiner JV partner will always expecting a higher premium in order to convince his shareholder that the IPO is a viable option. So you need to sync all the expectation of your stakeholders to make sure that they are all aligned behind the whole story of the IPO with all its particulars: governance, pricing, auditing firms, advisors, equity story, dividend yields throughout the whole process, and more importantly, even the lock-up period. So if you are a founder or one of the sponsors of a company, you will always be subject to at least 6 months lock-up period where you cannot disclose, you cannot sell your shares. Not all shareholders, if they are not aligned, will be happy or willing to sign or buy into this lock-up period. So all of this will have to be aligned early on to make sure that there are no turbulence during the IPO process. 9th point is basically investor education. In the UAE, the investor base is growing more sophisticated by the day, but still they need to be educated. You need to be engaged with your investors and start this engagement early on. And again, follow the bank's advice. Try to conduct some sort of non-deal roadshow. Try to test water with anchor investors, whether they will be willing to invest in your company or not. What are the concerns? What are the red flags that they may raise to your company? And you have to be receptive, because sometimes you're not going to listen to stuff that you will like. You will have to be accommodating and accepting to criticism, and you have to take this in a very constructive manner so you can act accordingly. And you need to engage very constructively with investors. The last point in the 10 tips for a successful IPO is basically the flexibility. Prepare, but be agile. So as this might sound a little bit ironic, because the first key point of success, I said prepare. Yes, you have to be prepared and you have to put everything in place. But at the same time, you have to be agile. You have to be flexible enough to change your strategy as days and months go through. Because at the time of preparation, the market condition could be at a certain level, and at the time of launching, the whole market condition could change. If you are stiff and you are going to stick to the script that you have came on to follow, you will face a lot of problems. So you need to be flexible. Timing shifts, structure evolves. even regulations sometimes changes. You can start your IPO at a certain set of regulations. By the time you finish your IPO, these set of regulation could have changed. And you need to have the mental fitness and you need to have the flexibility to adapt to the new changes that may happen throughout the IPO process. That's pretty much the 10, in my opinion, points to success. And again, what I always say to our clients, because people sometimes consider the bell ringing at the end of the IPO journey, that the bell ringing actually announce the end of the IPO. I always consider the bell ringing as the beginning rather than the end of the IPO. It is the new journey as a public company, a new journey with interaction with investors, a new journey with disclosures and corporate governance matters that you will have to follow. If I may just conclude before I finish my presentation today, I would say to any IPO candidate, start early, hire wisely, prepare thoroughly, and most important thing is to engage proactively. Thank you so much.
Anybody is having any question for Mr. Ahmed? Yeah, just.
My name is Atul Mehta. I'm from Mumbai, India. My question is, normally in IPO, the pricing of the issue is a very critical and very important.
Yes.
As you rightly said, it should not be very high, and at the same time, it should not be very low. And the promoters are always expect, their price should be very high, and they should get more money. Now, how do you when somebody wants to list a share in this part of the world, what kind of a price earning you take? I mean, you take US stock exchange, the Indian stock exchange, or because I understand that there are very limited stock which are listed in this part of the world.
So definitely this question would be better addressed by our friend here, Bernard from HSBC, and he's one of the best investment bankers ever I've dealt with in my career. But generally, as a general rule, your region, your market will always determine your price. You cannot compare your share price with a company that is listed or running the business in the US, for example, or in Europe. So you need to look into comparables. You need to look into other alternatives that investors will look at. Because basically, investors will always compare. Shall I invest in your company, or shall I invest in other companies that has already been listed? And no matter how smart the IPO candidate is, you will never match the experience of an investment banking team. And pricing is not just, you cannot take pricing just in isolation of one other important element, which is the offering size. And I've seen this firsthand in one of the IPOs when, our colleague Bernard here in HSBC team magically, before we launch, highlighted to the issuer the risks of upsizing the size of the IPO. Told them, stick to the original offer size. Sometimes people listen, sometimes people do not listen. And when they don't listen, as I said, magically, what happened is exactly what HSBC team has articulated a couple of hours in a call with the issuer. So my advice to you, look into your comparables, but before all, listen to your banks, assuming the second key of success, which is don't go to the cheapest, go to the best.
Anybody else?
Yeah, hi sir, it was nice presentation. Actually, my question is based on our yesterday's visit to DFM, where he explained that UAE market, means IPO market is more institutional driven. Almost 90% investors are institutions and just 8-9% at the most 10% are retail. Whereas in our India, it's other way around. It is 50-60% are retail and others are institutionals. So how is the volatile the UAE market, capital market is as compared to India? Because in India, somewhere you can tip, some news flashes and people like you saw, I saw, that type happening. Is such things are happening here?
So again, it's the question are more for our friend Bernard, but let me share my views on that. So definitely, the more sophisticated the market becomes, more institutional investors will be interested to invest. And we can see a lot of international investors are interested in our market here in the UAE, whether it's hedge funds. You can see a lot of other, international funds like BlackRock and all the big names, heavyweight champions that you can imagine are actually investing here in the UAE. A lot of institutional investors are Saudi-based, and they are also interested here in the UAE, in addition to the institutional investor base that already does exist here in the UAE. Just to give you a little bit of a flavor on the split between institutional and retail in a general offering in an IPO. Generally speaking, the split in an offering, which doesn't represent the importance, by the way, just the split in the offering, it's always around 90% of the offering will be allocated to institutional investors or professional clients, and 5 to 10% will always be allocated to retail investors. In other strategic IPOs, for example, like DIWA, I remember when we started DIWA, the retail was, I think, 5%, but because of the strategic role of DIWA or Empower, the government will always want to offer more shares to retail investors. So we've upsized the retail tranche, I think, from 5 to 10%. So it really depends on the strategy of the company. On one hand, you want institutional investors, so they are not going to flip. They are long-term investors. So somehow it will give you a little bit of stability in the share performance after listing. But definitely you need retail. Without retail, there is no liquidity. Without liquidity, the whole rationale behind the IPO will actually be defeated. So you need to strike a balance between long-term investors through institutional investors, but at the same time, you need to make sure that your shares are liquid, and this will only happen when you have a certain size of retail investors.
Is this part of world, how you see that this company secretary or governance people help in managing the IPO or working hand to hand with the auditor, investment banker, lawyer? Can you see that here?
Yeah, definitely, because now the board secretaries are actually gaining a lot of momentum. There are certain sections in the IPO regulations dealing with the company secretary. There are certain obligations on the company secretary. And in one of the regulations, actually, they some sort put a criteria for the company secretary or the board secretary to attain certain level of experience. So definitely, particularly after the IPO, it guarantees somehow the transparency between board members, the transfer of information at the same point in time, interaction between the board and the regulators, particularly the Securities and Commodities Authority. So definitely the board secretaries are gaining more momentum than before. And people are now actually, in the past, people tend to somehow merge between the legal counsel and the board secretary. Now we've seen a lot of companies deliberately trying to distinct between the legal advisor and have, a standalone board secretary, again, for the very reason that we've just explained, the importance of having a competent, well-qualified and trained board secretary.
Thank you. Thank you, Mr. Ahmed.
Thank you so much.
Thanks a lot. Yeah. I would now request Mr. R. Lakshanan to felicitate Mr. Ahmed with a token of appreciation, a memento from the Institute.
एक बंदे को उसमें से पैर के लिए जाना है तो सबसे पहले